Good afternoon again. Thanks for coming, and we apologize for the late start. Just up front, we'd like to apologize to the media who always, well, you support us by coming. Not sure what happens after you leave, but you support us by coming, so we thank you for coming. And for those of you whom we sent the advance copy to, we know you didn't have that much time to read it, but we are sure it would have been useful. This afternoon, what we want to do, as you know, is present the Monetary Policy Report, April 2010. Let me acknowledge the head table. Of course, you know Governor Ewart Williams, Dr. Shelton Nichols, and Alvin Hilaire, Dr. Alvin Hilaire. The format will be as it is as usual. We would present the Monetary Policy Report. When I say present, walk through an executive summary, and then we will open the floor to questions. Is Vern here? Vern, are you here? Anthony's here. We'll open the floor to questions, and we'll do our best to respond. Governor?
Good afternoon. Thank you very much for coming. Let me welcome my good friend from Bank of Baroda. I understand this is you're on your final phase here. Well, I wish you all the best. Let me welcome all our specially invited guests and you, members of the press. As you know, the Monetary Policy Report is published twice a year, in April and in November. This is therefore the first of the two reports for 2010. It is a report that's basically dedicated to reviewing the evolution of inflation and monetary policy against the background of the major economic and financial developments. The report also initially starts off by reviewing international financial developments. The message of this report is that global economic recovery is underway, driven by the highly accommodative macroeconomic policies. The recovery has been strong in Asia and other emerging market economies, largely India and China, but sluggish and tentative in the advanced countries. In these economies, the main risks to the recovery are sizable fiscal deficits, which came into being to help them get out of the severe recession, large debt burdens, and financial systems that are still in need of reform. The recovery has been very, very sluggish or delayed in most of the Caribbean countries that are heavily dependent on tourism earnings and workers' remittances. In fact, somewhere in the report we discuss that most of the Caribbean countries faced significant declines in real GDP. I think the exceptions were Guyana and Suriname. Belize, I think also, well, Guyana and Suriname. In Trinidad and Tobago, after 4 consecutive quarters of decline, real GDP grew by just under 1% in the 4th quarter of 2009. For the year as a whole, however, for 2009 as a whole, real GDP declined by 3.2%. And this is based on information compiled by the central bank. Please remember that the official source of national accounts data is the Central Statistical Office, but invariably their information comes out with somewhat of a lag. The turnaround in the 4th quarter was driven by the energy sector, not oil, because oil production has continued to decline, but by natural gas and petrochemicals. in response to rising global demand and new natural gas production capacity, the offshore Savonetta field. The non-energy sector continued to languish, declining by about 3% in the fourth quarter year on year. We always cite indicators that justify our estimate, and for the fourth quarter, the main indicators that so do are a decline in retail sales, in sales of motor vehicles, hardware, building materials, lower imports in the fourth quarter compared to the corresponding quarter of the previous year. Bank credit has fallen by 4.4% in the fourth quarter compared with the corresponding period, and it has been broad-based. The credit decline has affected both consumer and business credit, with a small increase in mortgage loans. Indicators suggest that construction activity was lower in the fourth quarter of 2009 than 2008. For one thing, one can identify that two large apartment construction projects stalled, and there was a slowdown in construction activity in the public sector. There was a slight increase in manufacturing, though capacity utilization in the sector remains very low at around 65% compared to 90 to 95% in more normal times. Based on unpublished data, the unemployment rate in the fourth quarter averaged 5.2%. It was 5.8% in the third quarter. This is unpublished. Inflation, as you would recall, in the last quarter of 2009 was very low. Towards the end of the year, inflation fell to 1.3%, headline inflation, which was the lowest that we had experienced for several years. Core inflation, well, food prices actually declined, according to these estimates, by the end of 2009 compared to the end of 2008, and core inflation, which excludes the impact of food prices, had fallen to 2%. About policies, you would recall that the budget for fiscal year 2010 called for a deficit of around $8 billion, or around 5% of GDP,